I want to welcome Steve Penny back to the show. He operates silverchartistnation.com and has an incredible service where you can go track his personal portfolio and stay on top of all his updates, which we're going to get into. Welcome, Steve.
You bet, Elliot. Thank you so much for inviting me back. It's always fun to speak with you, and I look forward to a good conversation.
Yeah, and I always look forward to your updates because it just you make such contrarian plays, and generally it pays off. Like you'll say, "I'm making a position in this," like just very level-headed. How do you stay so disciplined and have so much pain tolerance when making these decisions?
Well, I like to learn things the hard way. So, I've been doing this for, going on 15 years now. And, I've made a lot of mistakes and, I tend to learn from them. And, hopefully some of the things I've learned the hard way by sharing with people, I can prevent them from having to learn it the hard way. So, I'm contrarian in nature, and I like to buy things when they're just beaten to a pulp. And I like to short things when they're, irrationally exuberant. Like, for example, oil right now, oil looks, I think we're going to see triple digit oil in this next 6 to 18 months. However, we're due for a pullback, and that's a contrarian trade there that I'm in. So that's just one example.
Yeah. And with uranium, you cautioned people about chasing the pumped up green uranium charts. That was contrarian too. Everyone was incredibly kind of bullish. There was a frenzy around it. And here we are. There's a pullback, which you seem to be expecting. So I guess the first question is, what is your take on the whole uranium price action?
Yeah. So back in mid-November, I was urging some caution in the sector because, we had just moved really far, really fast, and everyone wants to talk about the fundamentals, and those fundamentals are wildly bullish, and they still are. However, you get to points in the cycle where all of those fundamentals are already priced in, and then it just takes one little bearish catalyst to send things pulling back sharply, and we've seen that. Now, uranium's pulled back sharply. A lot of the stocks are down 40% or some or even more. That's more of a pullback than I expected. We pulled back recently to our 200-day moving average, which coincided with general uptrend channels in most of the stocks, speaking generally. And I did expect that support to hold. Well, it failed. And then we pulled back another 10, 15%. So, I like this. Uranium is back to being a contrarian trade instead of a trend trade. And, it should be hard to buy. You should be like, oh, is this just going to keep going down? That doesn't mean we're at the low, but I think we're squarely in the accumulation zone for people who have, at least a 1 year plus time horizon. I mean, if you're looking to trade in and out and make a profit in the next four to 6 weeks, you might want to wait for a technical reversal. But if you've got a 1 year time horizon, I think this is a good place to accumulate.
Yeah, absolutely. And I agree. It should hurt. It's like you said, you've learned throughout your career and just you made mistakes, right? It's like a kid touching a hot plate. It burns and you never do it again. Well, when you chase a pumped up green chart, you get burned generally, right? Mm-hmm. And so you've learned to do the opposite and buy on deep red, right?
Yeah, 100%. I mean, if you're going to chase things there are plenty of momentum traders who make money. I mean, there's a lot of different styles that make money. You just have to be systematic about it. It's like, if you're going to be a momentum chaser, that's fine, but you got to use stop losses because you're ripe for a sharp pullback. And
you got to be very disciplined, right? Like very tight. Like momentum's tough because you got to be in and out really fast, kind of, right?
Yeah, 100%. Yeah, you might be accurate more on the shorter term, but it just takes 120%, 30% pullback to erase a lot of short, quick little wins. As I'm speaking to short-term trading here.
Yeah, absolutely. So then thinking about just uranium, because you had said the bullish fervor was so intense that it kind of was priced in. But do you believe that? And I think most people might say nothing is priced in until uranium spot price hits $70. Like once the supply demand crunch starts to get normalized, that is the selling point, right? So I guess how do you decide when something is kind of priced in versus when to expect a pullback? Because realistically, you're waiting until the price hits a point where the mine supply will come online, right?
Yes, 100% over the longer term. Yeah. But over the short term, like back in November, a lot of these stocks were trading at really high multiples. They were pricing in, $50, $60 uranium when we reached $50.80. That was the peak in uranium, but they were pricing in already much higher prices, which haven't come to fruition yet. I think they will, but it just hadn't happened yet. Yeah.
Are you as excited as ever at this type of level as a buying opportunity for uranium stocks?
No, not as ever. I think it's really good. But I mean, if you go back to March 2020, that was that was the moment, these things were just pennies on the dollar. So it's moments like that that you can really buy with a high level of confidence. Although, I've got a high level of confidence right here. These kind of opportunities that we're seeing now don't come by very often, especially in a bull market.
So you're monitoring kind of the fundamentals of the market, and that's what's giving you the confidence. So are there any new developments that you've kind of come across that give you so much confidence in the uranium space that allow you to sleep well at night and be as bullish as you are?
Yeah, I mean, just to revisit the primary fundamental thesis from a 30,000 foot view is the world is transitioning to more and more nuclear. So there's going to be growing demand, and so the supply just isn't there. And these mining companies need, somewhere north of $60 uranium, probably even higher than that, to just make a profit, to incentivize the new production that's going to be needed to meet this growing demand. It really is just a simple supply demand story. So the price is going to have to go up unless something dramatically alters that equation, which I can't foresee. And then as far as other catalysts, I mean, the stuff going on in Kazakhstan, that country is the largest producer of uranium. So, that is going to make utilities think about diversifying where they get their supply from, which, I think is bullish for the sector. There's so many things that could potentially happen. There's just so many catalysts out there. The political winds are shifting towards more embracing nuclear as a green energy source because it's got zero carbon emissions. We're seeing, energy crisis across the world, especially in Europe. And, nuclear is a big part of that solution, and people are recognizing that.
You did mention oil in the beginning of this. And so it's tough because it has run up. You're saying exercise caution because it could pull back. But do you see that almost like a sure thing in that, there's no CapEx spend? People think that all of a sudden magically we're just going to not need oil in a year.
Yeah.
And so do you see that kind of in a similar way, just so underinvested that there could be a supply shock there?
Yeah, I do. So I'll just say up front, oil is not my sweet spot. There's so many cross currents that I don't track on a very daily basis, but you're right. The sector has been so underinvested in. And as Rick Rule says, the cure for low prices is low prices. And back in mid 2020, we saw the price go negative of a physical commodity. I kick myself a lot because on that day when it went to negative 40, I bought these long dated call options on UCO, which is a 2x leverage ETF. And then the next day I sold them because I'm like, how do you have 2x long leverage on a negative price? And I'm like, I don't like to trade things that don't make sense. So I'm like, this just doesn't make sense. But had I held on to those things, my gosh, I didn't mean to get sidetracked there. But yeah, oil, I think supply demand fundamentals very bullish. However, I'm short-term cautious here. I'm actually shorting it, but I think for most people, the simplest way to do it is just buy pullbacks. That's the way to play an uptrend. You buy sharp pullbacks, and I would be looking for that in oil. In fact, I am looking for to increase my exposure.
Wow, so that's really good to know. So you're shorting it on the extreme short term. So you think you're pretty much expecting a pullback. So what makes you expect a short-term pullback in oil?
Several things. I mean, the technicals were overbought in multiple timeframes. We're seeing, as David Brady talks about a lot, negative divergence. So that's where price makes a new high, but the momentum indicators like RSI or MACD or something like that doesn't make a new high. The commitment of traders, we're seeing the big banks who are almost always right over the intermediate term. They're increasing their short position aggressively on oil. And it just seems like a lot of the bullish fundamentals are already priced in, and we're just one bearish headline away from a sharp pullback. And I think that pullback would be the opportunity to get long. And that's what I'm looking to do. I'm looking to add some exposure to oil to the long side.
Yeah, that's really interesting. And I'm just thinking back to the psychology around that amazing buying opportunity when it was negative. And the reason people weren't buying it was because they're thinking, oh, well, the world's going away from it. Now there's too much supply. People need to pay to get it off their hands. And I guess that's what prevented people from buying it, thinking that the world is moving away from it. And
100%.
Yeah. So you don't think that that's a concern, really? That long
No, absolutely not. Yeah, the generally accepted narrative is that, oh, we got solar, we got wind, we got all these things coming on battery vehicles. We don't need oil anymore. I mean, those things are they're good. They're good, a part of the solution, but you still need oil. And not only are we going to need we're still going to need more oil. It's not like we're even reducing the amount of oil that we need. We're still going to need more oil as population grows and other countries industrialize. So yeah, I don't think that narrative has penetrated the mainstream view yet. So I think oil has a long runway ahead. And not to get off track, but I'll just make a brief comment. Platinum is another one that reminds me of that, because they had the Dieselgate scandal in 2015. People kind of swore off diesel cars, a lot of countries, and that's the general market narrative as well there. Oh, platinum's going away. Well, no, not so fast on that one. So platinum's another sector or a metal I'm looking at closely.
Right, because platinum's used in catalytic converters, and you're saying people won't need catalytic. Oh, the narrative is that people won't need catalytic converters because oil cars are going away, but that's not for a few years. And are you saying the supply is tight, so there probably will be a squeeze in platinum? Is that kind of?
Well, yeah, I should have explained that better. Platinum is the primary metal in diesel catalytic converters, where palladium is primarily used in gasoline engines. But they are substitutable on a one-for-one. And the price of palladium is twice the price of platinum right now, which is a wild historic anomaly. I don't think you've ever seen that to this extreme. So it only makes sense for these auto manufacturers of regular gasoline engines to switch platinum for palladium, or vice versa, substitute and start using platinum. So that's going to be a big source of increased demand. And then you've got hydrogen fuel cell technology, which uses a tremendous amount of platinum. And then just simply the charts too. I think a lot of just investors are going to see the underperformance here of platinum and say, hey, I want some exposure. So that's kind of like three big catalysts for platinum.
Okay, that's good to know. And yeah, so the chart's doing really badly. I actually didn't know that platinum was a big part of hydrogen fuel cell, because that is a growth industry. Mm-hmm. So very, very exciting. Wow. Good to know. So then just thinking about kind of a macro level, we talked about a lot of contrarian trades. Now investors get to see like a crashing growth stock tech environment. And like, as a contrarian investor, do you see any opportunities in that space at all? Like, this stuff is tanking, like seriously. So how do you choose to allocate over to hard assets versus, potentially these digital growth assets?
Yeah. So I think, the NASDAQ and the tech space, those tech stocks are wildly overvalued still on a fundamental basis, but nothing goes straight down, right? So, we had been shorting the general equities consistently. I took several swings at it over the last few months. But, we got so oversold that we were just due for a bounce. In fact, outside of it's not my character to post like charts of ARK, like the ARK Innovation Fund, but I posted a bullish descending wedge a couple of weeks ago when it got right near the lows, and, we've rallied nicely off of that. So I think, we could see a little bit more upside on this relief rally. We might even go back up and test the recent highs, but I think over the next 6+ months that, put it this way, I don't want any long-term exposure to the NASDAQ or tech space at all. I just stay away from that with a 10-foot pole. I wouldn't touch it with a 10-foot pole. And if you look at a ratio of like commodities versus general equities, they've never been cheaper. And then if you drill down, well, which commodities are the most undervalued? You come up with uranium, silver, platinum, energy even.
Got it. So that's what's really driving your decision, because the ratio is so skewed. And as a contrarian investor, you love that historically ridiculously skewed ratio for commodities to stocks, right?
Yeah, 100%. Yep.
Okay, got it. So then moving on to silver and gold, which are a whole different animal in terms of like supply demand dynamics, narratives. People are, I don't know what your take is on the sentiment of it, but it seems people are still bearish, even though gold has been performing pretty well. So can you give any insights into those assets and like your read on the charts and just what you're thinking about those?
Yeah. So interestingly, on the gold chart, one of my favorite patterns to trade is a nice symmetrical triangle pattern. And that's where you get a series of lower highs and then higher lows, and they converge at an apex. And that's bulls and bears just battling it out until you reach a resolution. One side wins, then you usually get a sharp move. Well, interestingly, on this gold chart, the apex of that triangle pattern roughly coincides with the next FOMC meeting in March, where they're expected to begin raising rates. So as far as clarity over the next 6 weeks, I don't have much clarity on the direction. I do have a slight upward bias over the next 6 weeks, but I would not be surprised to see one more fake out move lower. I think it's unlikely, but I'm mentally prepared for that. 1675 is major support on gold, 2141 in silver. Any pullbacks to there I view as fantastic buying opportunities personally. But I think the Fed rate hike cycle that's probably going to begin here in March is going to be bullish for the metals. If you go back to 2015, December 2015, that first rate hike in many years marked the low within a couple of days, a major low, 1045 in gold. And we haven't seen that low since. And that coincided with the beginning of a rate hike cycle. And then what I expect to happen and what's happened in the past, eventually the Fed has to reverse course. Our economy can't sustain higher interest rates. So then when they eventually reverse course and backtrack on this rate hike cycle, that's when you see the really big move in the metals. And I think that's when we see new all-time highs in gold and silver.
Yeah, that makes so much sense. So you think that they're going to be super dovish on rates, and that is going to cause, what's been depressing these assets, which is the threat of higher rates, to go away. And therefore, these things are going to probably start pumping around that time at the FOMC meeting.
Yes, exactly. They may get a few nominal rate hikes in, but I think that's already priced in advance. So, there's the saying, buy the rumor, sell the news. I think that's very likely because historically that's what it's been leading up to rate hike cycles. The metals are weak leading up to that first rate hike. And then once you get it, then that's a trend change. The metals start climbing higher. And then when the Fed reverses policy altogether and says, we're not doing that, we're going to go back to easy money. That's when you see the big moves.
Wow. So if you see some deep red moves on silver and gold, and even in the miners, which you are, well known for investing in and buying super cheap and low, you would be bullish on that opportunity if they come down even further, because they are, what do you think about the price action in miners? It seems to be kind of, negative, right?
Mm-hmm. Yep. The miners have been weaker than the metals themselves.
Yeah.
Which presents opportunity if you're long-term bullish. I break the precious metals sector down into 3 or 6 components. Like you got physical gold, physical silver, senior gold miners, senior silver miners, junior gold miners, junior silver miners. So it's kind of 6. And then you can run ratios against each other. And right now it's junior silver miners that are the most undervalued on a ratio basis. They're also the most volatile. So, they're more risky, but they look very attractive down here. Could they go a little bit lower? Absolutely. Especially over the next 6 weeks. That's a threat. But if you've got a 6-month plus time horizon, I think you'll be handsomely rewarded for accumulating down at these levels.
I look forward to getting all these super disciplined, contrarian, high pain tolerance updates through the silverchargesnation.com. So where can people go actually to find you and stay on top of all your updates?
Yeah, for sure. We put out a free weekly newsletter that goes out every Sunday. And the idea there is to provide tons of value for free. And we try and make it as good as most paid letters for free. And you mentioned the link. That's a link unique for your listeners, just because, we get along really well. And I think your members would fit in really well, your listeners. So silverchartisnation.com is where you go to get that free letter. There is the option to upgrade to a very low ticket premium service where you get real-time alerts. I show you exactly what I'm buying and selling and when. And we keep that super affordable, but there's never any pressure to upgrade to that. silverchartisnation.com.
This discussion is for informational purposes only. Please consult a certified financial planner when making any decisions about investing. And do your own research before making any decisions. Investments are risky, and you can lose lots of money in them.